Evolution of money. Currency has evolved over time from commodities such as grain and gold into its current form of paper and fabric blended notes. The first stage in the evolution of money was commodity money. This is the oldest form of money, and its value is based on the value of the commodity used as a currency. Initially, grains and other easily accessible commodities were used by ancient agricultural economies. These commodities tend to decompose and lose their value over time. This eventually caused metals, especially gold, to turn into the primary currency. Commodity money is characterized by the fact that its value is equal to the value of the commodity used as a currency. A gold coin of 1 gram has the intrinsic value of 1 gram of gold and can purchase any goods or services worth 1 gram of gold. The next stage of this evolution was representative money. In this form of currency, paper money or certificates are issued whose value is fixed to that of a commodity and can be exchanged for an equal amount of that commodity. Although paper money was first used in 11th century China, it was globally adopted in the 18th and 19th century. The system where currency value was fixed to gold and could be exchanged for gold is commonly known as the gold standard. The gold standard was widely used until the end of the Second World War. After the Second World War, the Bretton Woods agreements had the US dollar pegged to the value of gold and other currencies pegged to the value of the US dollar. Eventually, countries abandoned this system as it created excessive dependence on the conditions of the US economy. To this day, there are still countries that have their value pegged to the US dollar. We now move to the type of currency that we currently use, fiat money. Fiat money is currency that a government has declared to be legal tender but is not backed by a physical commodity. The value of fiat money is derived from the relationship between supply and demand rather than the value of the material that the money is made of. Fiat money is based solely on faith. Fiat is the Latin word for "it shall be." Fiat money is inconvertible and cannot be redeemed. Fiat money rose to prominence after the collapse of the Bretton Woods system in 1971, when the United States ceased to allow the conversion of the US dollar into gold. A fiat money-based currency greatly loses its value should the issuing government or central bank either lose the ability to or refuse to further guarantee its value. Most modern currencies are fiat money-based and are controlled and managed by central banks using a system called fractional reserve banking. The adoption of fiat currency by many countries from the 18th century onwards made much larger variations in the supply of money possible. Since then, huge increases in the supply of paper money have taken place in a number of countries, producing hyperinflations, episodes of extreme inflation rates much higher than those observed in earlier periods of commodity money. Our next episode will cover inflation and how this invisible force affects you. Random Walk Ed is created by Random Walk Investment and Financial Services. You could contact us if you need assistance with your finances or are looking to make investments. Please contact us by email in case of queries. Please consider supporting Random Walk Ed on Patreon. Your contributions will help us improve our content and continue making it available for free. Subscribe to our channel to receive updates on our latest videos. Share this video with anyone who might find it useful.